Hey everybody, Tim Thompson, CPA, coming at you again with another round of tax help. Day late this week, and I apologize for that. I had 2 funerals the past 2 days, and all I can say after that is hug your loved ones, because you don't know how long they're going to be around. And anybody that means anything to you of any level of significance, just reach out to them, let them know you care about them, because both of these, well, one of the 2 for sure took people by surprise. So that's all I'm going to say on that. As usual, I'm going to give you a business tip and a tip specifically for individuals, so that both sides of the coin can find some use out of these. So first thing I want to talk about will be for businesses, and it's about audits for businesses. And I'm not talking about audits of financial statements, I'm talking about IRS audits. And then on the latter half, I'm going to talk about individuals and home office deduction. So to kick it off, I get asked all the time about audits in general, but especially from businesses, because, some people want to push the limits, other people just want to make sure that they are living everything on black and white. I will tell you that I think the number from 2018 was 0.6%. So 0.6% of all individuals that filed tax returns were audited. That's not a big number. And when you think about businesses, especially large corporations, high net worth individuals, that kind of thing, they're definitely going to get audited more because there's more money involved and potentially more tax revenue. So I always look at my small businesses, and risk typically are low. That doesn't mean it won't happen. But there's 3 things specifically that can definitely raise a flag, and that's every question that we're ever asked. What are the flags? Are there any red flags? Are there any audit flags? The number one thing out there that I always look at, and I have people look at, is when things change drastically from year to year on a tax return. That doesn't mean that you can't have way more expenses or way less in any given year. But one thing that can really be damaging sometimes is if you're switching accountants and they change the way that they report things on the tax return. Everything else can be running the same, but I want to put this expense over here in this bucket instead of this bucket over here. And the IRS is going, whoa, why are you changing things? So change is what kind of will freak out the system a little bit and potentially raise a flag. A flag doesn't mean you're going to get audited, it's just a flag. Another thing, and you may or may not be aware, but every business has, when you file a tax return, has to put in an NAICS code. And don't ask me what NAICS, but I will put it in the comments below because I don't have it off the top of my head. But basically, it's an industry classification list, okay? And it says this is this type of business, this is that type of business, and it's usually a 6-digit code. There's also SIC codes out there, SIC codes, that are 4 digits, that are also, I think, an optional field on the return. But the IRS has been collecting this information for years, and so they know that somebody that has an NAICS code of 1, 2, 3, 4, 5, 6 experiences this level of expenses. And they know that an NAICS code of 9999999 has this kind of expenses. And so when you report something that has drastically different percentages, especially like on the gross margin line or on certain expense lines, that's going to raise a flag potentially. So that's something to always keep in mind. And then the third thing is just a general inconsistency year over year. When things just change for no reason to change, that's always going to raise a flag. Kind of goes along with the first thing in point. So business audits, while they're small and while the numbers are historically low, 0.6% is a very low historical run rate for audits. I do want to point out one thing though. Last year, 2019, IRS went for and was approved for a massive budget increase. And I want to say the number was 285 million. Somebody might correct me on this, but 285 million specifically earmarked for enforcement. What does enforcement mean? It means audits. It means actually examinations. That's the official IRS term. It means examinations. It means more potential levies. It means more review for fines and penalties. It means any way they can think of to generate tax revenue from taxpayers. So that 285 million means more bodies that they can hire to do just that. So be on the lookout. Audits could see an increase in the coming years. Now to talk to my individuals, home office deduction, that got changed significantly on last year's tax filings for 2018. And that's because if you were a W-2 employee who claimed the home office under the unreimbursed employee expenses deduction, that went away. along with anything that you spent out of pocket for your employer. If you drove a lot of miles, if you spent a lot of your own money to generate business on behalf of the business that you worked for and you received just a W-2, you used to get to report those expenses. And guess what? The Tax Cuts and Jobs Act, say that 3 times fast. Don't do it. The Tax Cuts and Jobs Act, I still can't say it, went back and took that away because it had been pretty abused. I've seen some returns in my come across my practice of people who were changing over to use me, and I looked and I thought, holy moly, what was this preparer doing? They're just trying to generate a max refund illegally. People didn't really know what they were doing, and it caused a lot of problems. So what did they do? They just cut it. They said, no, we're not going to allow that deduction anymore. Now, what's the caveat? Why am I talking about home office deduction? Because if you're self-employed, if you have any kind of 1099 income, and by 1099 income, I'm specifically speaking about box 7 where it says non-employee compensation, there is a chance to potentially take the home office deduction. It's not going to work out in every case, but it's going to work out in a lot of cases. So we're talking about a percentage of your rent, a percentage of home mortgage interest, a percentage of utilities, and those kinds of things. And there's a list of expenses we can take. And I take those to the fullest when they apply. And so I want to make sure that people understand that home office deduction no longer applies if you're just a W-2, but if you have 1099 income or any side income that you have to report on a Schedule C, then home office is still an option for you. That's all for this week. I hope you're having a great February so far. It is a rainy, cold day here in Dallas. It's our version of winter, so 46 and gray and rainy. That just comes with the territory down here. So hope you guys are all having a great February so far. I wish you a great week. Valentine's is this weekend, so while you're in the middle of loving everybody, love them tight on Valentine's Day. Have a great day.